Have you ever wondered how to implement profit first strategy for your construction business and if you should even do it? First of all, I would like to mention that I do love profit first strategy for contractors, mostly when they don't have a bookkeeper or any other financial advisor who would be walking them through their numbers on at least monthly basis, walking them through the financial statements, walking them through the job costing per job, because this is the best and absolute best way to know your numbers and to know where you stand. So I'm sure you're aware that according to Profit First, the main point is to get the money allocated and set aside to 5 different accounts, one of which is profit. And it may sound very challenging, but as soon as you get into the habit of actually doing it, you will see the perks in it. And it doesn't have to be a big amount. You can start allocating as much as 1% to the profit account, but at the same time, that habit alone and the fact that there will be money stored in there will make it worthwhile, especially knowing that as you grow, that percentage will grow as well. So this whole concept about opening a lot of bank accounts, it seems like a lot of work, but at the same time, if you are looking at one bank account and you see all that money sitting in there and you don't have always, as a busy business owner, in your head the fact that you have all the bills that needs to be paid, you have taxes that needs to be set aside, and then all of that adds up and you realize that you actually haven't made any profit and probably didn't even pay yourself either for all the work that you do in your business. So in reality, when you have a chance to look at your financial statements, such as profit and loss, balance sheet, statement of cash flow, you already know what is going on in your business. And that bank account accounting is really not necessary, especially for your bookkeeper that needs to reconcile all the 5 accounts. But if you don't have someone helping you, those 5 accounts may be really a good system to follow. Now let's talk about this new formula that Profit First methodology is using when you have your sales minus profit equals expenses instead of your regular sales minus expenses equals profit. Really, my thoughts is that it's just a simple math. Yes, in reality, it does, sales minus expenses, what is left is your profit, and your profit depends on how big are your sales or how big are your expenses. But at the same time, if you think about it, when you already take the profit that is desired out of your income and you see what expenses you have left, you start getting super creative on the ways to actually have that amount of expenses only. So this way you would start looking at your business and you would start coming up with the ways to lower those expenses so you could keep that desired profit, and that would really help you sacrifice on the things that are not really needed, are not providing the return on investment that you desire, so they can go. According to the Profit First methodology, one of the best strategies is to pay your bills only twice a month. And that would really keep your cash flow under control, because this way you will be able to see the patterns and trends of how much money you're spending. You will see how cash accumulates and you will see where cash really goes. In my opinion, understanding financial statements can get really hard, especially if you don't have such education, you don't have experience of constantly looking at them, constantly trying to figure out where the business is going. So really, the balance in the bank account is the only thing that you can trust sometimes. And this way, if you have a separate bank account, like Profit First strategy suggests, and you know how many bills you have come in this part of the month and the other part of the month, that would really help you spot the patterns. Have you heard of the really good rule of 30-30-30-10 when it comes to your business? It's considered that it's really good when you have 30% of owner pay, then you have 30% of direct costs, 30% of indirect costs, and at least 10% of profit, which is used most of the time as cash to stay in business. Profit first methodology, on the other hand, suggests and recommends that you move towards the target allocations, such as when your gross income is at 100%, right? What is gross income? When your revenue minus your direct cost, which is your materials and labor, that is your 100%. And out of that 100%, 35% would go into owner's pay, 40% would go into operating expenses, and 15% would go into tax and 10% into profit. That is a good formula as well. The difference is, of course, the tax, but tax is usually in your indirect expenses in the first formula. So, of course, it will not look like that at the beginning, but as you grow, you start allocating more and more to those specific accounts, and this way you keep on growing your profitable business. One of my favorite parts of Profit First is the saying that Mike is saying that you have to cut the fat, but don't cut the muscle. I couldn't love this analogy more. When cutting the expenses that do not make us money, we need to make sure that we're not cutting into the muscle of the business. What is the muscle of the business? Something that you cannot compromise on the value of that service, for example, right? You want a good legal team. You want a good financial team. Those are the people that you cannot just hire someone that is cheaper. Other things, you may look for better prices, let's say insurance, let's say vendors. Again, got to be very careful on the quality of the product that you receive. Let me know in the comments what you think about Profit First for contractors. Have you tried implementing it? Did it work? Are you thinking if it's gonna really be a good fit for your business? And as usual, subscribe to the channel, put some likes. This really helps me get the information further to people that it might be helpful for. Also, leave a comment if you would like to have more information on Profit First strategy, and I will make another video because there are so many great ideas in both of those books by Sean Van Dyke and Mike McCullough.